Good morning, ladies and gentlemen, and welcome to the show on this January 25th, 2023, a Wednesday. Thank you for tuning in. I'm glad to have you guys here. Now, oh my gosh, what just happened? I'll tell you what. Picture if you were at a casino, okay? And a whole crowd was in there, first thing in the morning, if the casino just opened up or whatever, and you're all betting on the tables and stuff, right? And for about an hour, things are going your way, and all the people in the casino, things are going their way, and they're starting to win. They win big. All of a sudden, the casino, at about 2 hours in, when everybody's got a lot of money on the table, the casino says, "Hey, hold on, stop it. Stop the casino. Stop the wheel. Stop the roulette wheel. Stop everything. It was a technical glitch. We're going to cancel all your winnings." Well, the stock market's nothing but a big casino, guys. Right? And oh my gosh, what just happened? They're calling it now. I don't know. I don't know what it was. I'm just speculating here. Right? But they're calling it a technical glitch. Well, maybe it was. I don't know. But I'll tell you what I think. This is my personal opinion. Is computers do all the trading now. Okay? And the computers can act faster than a human at like a million times faster. They can trade. They can trade at lightning speed. And I think what's happened is the markets have an instability in them where markets haven't been able to set fair value for a very long time. And if you get... Now, this is just what I think. I'm just saying what I think happened. I think that when markets hit a certain point where things are overvalued far too much, and the computers all of a sudden take over, and they say, they're trying to find fair market value on certain things. And what I think what happened was the computers did a whole bunch of trades, and basically because the market's ready to fall now, and has been for a very long time, the computers took over and they started to assess the value of these companies and stuff. And what happened was they had a meltdown in the markets, what I think happened. And so what they did was they just came out and they just basically said, well, technical glitch, and they just halted trading, and then they just canceled all the trades. But what happened? What was the net result? And this is what really gets me, is the amount of the size of the drops. I heard that McDonald's dropped 55%. That's what I heard. Of their entire value. Before they halted trading and they canceled all those trades. And yeah, they're canceling all the trades. They're just canceling the trades. They're just making it go away. And so this is huge because it's an indicator to me. Now, if that's all real, if it wasn't really some sort of a technical glitch, just saying, and in my personal opinion, I don't think it really was a technical glitch. I think it was computer trading, that the computers are just basically trying to figure out trying to market to what it's supposed to be worth. And we see this massive drop, and let's take a look at this. Let's open up the chart right here. Take a look at what happened. New York Stock Exchange says certain trades to be canceled after glitch. They're calling it a glitch. Now, that's just my opinion. Maybe it is a glitch. I don't know. But I'm just saying, that I'm very suspicious of this. It says the New York Stock Exchange said some trades will be declared null and void. So they can just basically, now if this was a casino, the casinos just, can they ever just come along and say, oh, you're at the roulette table, oh, you won, okay, it's null and void. Sorry. Oh, you won 800 million. Oh, sorry. They can do it evidently at the stock market. Well, just my opinion. It says the New York Stock Exchange said some trades will be declared null and void after glitch caused hundreds of securities to commence trading on Tuesday without an opening auction price. The exchange said transactions in a swath of stocks will be reviewed as clearly erroneous under New York Stock Exchange rules. That applies to trades in certain securities that did not conduct an opening auction. That occurred after the 9:30 bell before certain thresholds were set. Normally limit haywire swings and that were executed too far from the reference price. Well, have they ever considered that if the stock market is really, really ready to fall, and the computer algorithms know, because these things are on AI now, they're on artificial intelligence, they know. They can just call that a glitch. They can say, hey, it was a glitch. Even though it was a trade made legitimately, they can say it's illegitimate. They can do whatever they want nowadays, in my opinion only. It says in an updated statement on its website several hours after the debacle rattled Wall Street, the exchange identified more than 250 stock symbols that were affected. It also noted that when it received key thresholds known as limit up, limit down bands, the price range above or below which executed will be busted. The New York Stock Exchange didn't elaborate on what prompted what it called a system issue as the session began, nor did it say how much it may ultimately cost. It says such events are extremely rare, and we are thoroughly examining the day's activities to assure the highest levels of resilience in our system. The New York Stock Exchange Chief Operating Officer, Michael I can't pronounce his last name, Blogrund, said, we ended the day with a normal market close and expect a regular open on Wednesday. The glitch set off wild swings and trading halts, causing dozens of the biggest U.S. companies to plunge. In some case, veering 25 percentage points between a high and low in a matter of minutes. Banks, retailers, and industrial companies were among those affected, including Wells Fargo, McDonald's Corporation, Walmart, and Morgan Stanley. Also, I also heard it was J.P. Morgan and a number of them, you know. It sounds to me like a computer-generated stock market plunge that took the stock market below its stop limits, and they just halted trading, and they basically cancel all the trades. That's what I think happened, you know. Now, I mean, who knows for sure? I don't know. I'm just speculating on what happened, but you know, I mean, I've said that a number of times here because I'm not there. I don't know exactly what happened, but I'm starting to think. This is what I'm starting to think. That they can just make up the rules as they go along. They're like a casino, yeah. But they're just a casino that makes up the rules. And, you know, the banks are the same way, guys. You know? And you guys got all your money. You think your money's safe in the bank? You know, there used to be a saying, like, back when. They used to say, it's money in the bank. Because banking the money, and they, you know, after the 1930s, after what they did to you guys in the 1930s, and, you know, most of you don't remember because you didn't have it done to you. But you ask your great-grandparents or whatever, or somebody that remembers. I mean, it was a long time ago. It was almost 100 years ago. The banks, that's the thing. They can make up the rules as they go along because they're in charge. Picture it this way. Picture it like a game Monopoly. A bunch of kids are playing. One kid's the banker. And he decides to make up the rules as he's going along. Who's going to win the game? 100 for me. 10, and he's got the bank. He's holding the bank. And then he gives the other kid $10. And he says, now, you give me Park Place and Boardwalk for that. I mean, this is what we're dealing with here. How can you guys ever win? And you got your money in the bank. It belongs to them. It's their money. It's not your money. Just remember that. And they can make up the rules as they go along. What kind of a world is this, you know? But now, they don't like you buying gold and silver, real physical gold and silver, because that you're being your own bank. You're being your own central bank when you do that. And you're not coming under their rules. They just can't say, okay, we're just going to keep your money. And believe me, that could be coming, because you know how quick they solve this problem. They're very smart. You see this problem they had in the stock market? They just said, oh, it's a glitch. Cancel all the trades. Stop the market. They saw it. Problem solved. You know? Anyway, I'm going to move on, guys, and take a look at the markets today. You know, I just don't trust any of them. And they've made themselves on being rich by not being trustworthy. But you guys trust them. And this is what they did after the Great Depression, after they really, really took advantage of the people during the Great Depression, and they just basically took their money. They stole their money. And some people out there just jumped out of windows because they couldn't take it. You know, and what they did was, for years and years, they gained our trust again slowly over a period of time, the banks. And this is why they call it savings, loan, and trust, you know, because they wanted you to trust them. They give you a toaster as a little bait. This is bait to get you into the trap. You know, back in the old days when I was a young guy, the banks used to offer you things like a toaster if you'd open an account with them. In other words, trust us with your money. And they were faithful for many years. For several generations, they were faithful with your money. But they're getting ready to take advantage of you again, because you don't remember what they did in the past. Don't trust the bankers. Anyway, I got enough said. Let's take a look at the markets today. Down 11 cents on the day so far. Silver price is $23.56. Let's take a look at gold and see what gold's doing. Gold today is $19.31. It's down $6 on the day so far. No real big moves. It's back. It's kind of like back in that channel. It's been running in this channel for about 7 weeks. It's getting up close to this channel that it's been in. It really hasn't left it completely. Silver dipped a little bit on the low side of the channel, but still in this channel. And you know, when it's running in a channel like that, it's getting ready for a big move. We haven't seen the big move yet. What we've seen is a bunch of crooks out there trying to get physical. I say crooks, I mean, you know, well, it is. They are crooks because they have been charged with manipulating the silver market. I believe they're still at it, though. You know, because they're basically, you know, I mean, they just get a slap on the wrist compared to the amount of money they make off of being crooked. They just get a slap on the wrist, and then they go right back at it again. Anyway, so there's your price of gold and silver today. Let's take a look at cryptocurrencies. We're looking at Bitcoin at 22,546. Anyway, I was talking about channels. The gold and silver price been running in a narrow channel there, and they're getting ready for a breakout to the up or to the downside. And cryptocurrencies just went into a new channel here at about 22.5. It was 17 something for a while. It was in that channel, and that's why I say when things run in a channel for a while, what they do is getting ready for a breakout to the up or to the downside. And being as things are the way they are, you know, I mean, okay, let's take a look now at the stock market. It's down 222 points. I'm going to refresh the page here. It's down 329 points. 33,497. Let's take a look at the S&P 500 at 3961. It's down 55 points on the day. 3961 for the S&P. Now let's take a look at oil. Oil is 79.75. It's down 38 cents, or that's almost a half a percentage point. So it's under $80 again, oil. And now we're going to take a look at bonds, the bond market today. And what we're seeing is falling yields here, but not substantial. 2.3 basis points on the 30-year, and the 30-year's at 3.59. And it's 2 basis points on the 10-year down. It's at 3.44 on the U.S. 10-year. And now we're going to take a look at the dollar index at 101.71, and it's falling right now, the dollar. So anyway, guys, this, what they call a technical glitch, I think it was a stock market. This is my personal opinion. I think it was a stock market meltdown. A sudden, quick, computer-generated stock market meltdown that's ready to occur. Ready to occur again. I think they stopped it, and you might never hear that. Like, they just made it go away. But those forces that are in play that made that happen, if I'm right about that, the forces out there that made that happen, the computer generated, they're still there. The pressure, in other words, the pressure for those movements in those particular stocks are still there. So they did, if I'm right, they didn't take the pressure away. All they did was is they covered the whole thing over. It's kind of like a say you had a maid who was working in your house or whatever. Say you were rich and you had a maid working in your house or whatever, and you know she sweeps up the floor into a big heap of dust and dust bunnies and everything else, you know, and then she just sweeps it under the rug. She didn't actually clean it up. All she did was is just hide it. And see, if I'm right about this, that's all they did was hide it. But the pressure that caused that to happen would still be there. It's just that they would have stopped it. And gosh knows what tricks they got up their sleeve for stuff like that. You know, how long can they continue to artificially control these markets? Totally control these markets with the plunge protection team and so on. The exchange stabilization fund and so on. How long can they continue to have total ultimate control over these markets while the underlying economy falls to pieces? Eventually what will happen is the underlying economy will get so bad that the markets will, and then because they've held them up for so long artificially, it'll just be a crash like we've never ever seen before. It make the 1920s pale in comparison. So the longer you hold something back, when it finally breaks free, the more energy it has in the direction it wants to go. So anyway, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.